Hey guys, Mike here. So, oh boy, what a day in the market, and it was definitely a green day and another volatile day, as we talked about, right? So we're going to see big swings, and it's kind of funny because I try to start recording about usually 20 minutes before the market ends, so I can try to get my son to jiu-jitsu class and everything. And wouldn't you know, the last 15 minutes we get this enormous surge on multiple stocks. So I had to go back and record some stuff real quick for you guys so I can give you some accurate data and everything. But again, we're going to talk about a bunch of stuff today. The data that got released today, certain stuff about bonds, one of the biggest trades I think we'll remember for the rest of our lives will be coming up very soon here as well. But again, what is this? You want to call it, I always call it a year of first or a time of first, I guess what I need to call it. And of course, what happened, I guess the market must have liked it or didn't really care. We end up ousting the Speaker of the House for the first time in history with a vote on the floor like that. So that is another first. And did you know this? I found out something new today, and I love to learn new things. This is how stupid things are when it comes to our government. You don't even have to be elected to the House of Representatives to be the Speaker of the House. Did you know that? How do I know that? Because they announced today one of the people they're thinking about voting to Speaker of the House is who? Donald Trump. You do not have to be a member of the Speaker of the House to be in charge of it. Isn't that crazy? I mean, the same way you can be, if you're a felon, you can't vote, but you can run if you're a felon and get votes. Like, it's nuts, right? And I would never guess that. Would you have guessed that? So if you didn't, you learn something new every day, right? But again, and so that's going to put, not that the market cares about it, but if you thought it was a beep show before, then just wait until you get to see some of these people they're putting up for Speaker of the House now. Oh, it's going to be fun, let me tell you. Now, looking at the data this morning, and I said yesterday, the job data from yesterday and today with ADP totally contradicts one another. It was hot yesterday and today way under in the ADP. So I think what is it, like 6 reports in a row it's been like this. And of course, what's bad for the economy is great for the stock market. So it's like, this is wonderful. And then of course, you had more data come out at 10 o'clock. We ended up with factory orders, ISM services, business activity and stuff, which came actually hotter than expected. Then the market actually sold off when that came out, but then started revving up for the day. And so again, it's funny to see how it takes this stuff. Everything else just kind of came in line. S&P Global Composite PMI and all that stuff down there at Services PMI. Everything else came in line. And so the market digested this. And again, we've been selling off like crazy. So you expect to bounce, right? You expect some shorts to have to cover all this fun stuff. Now, one thing I like to do on this channel, as you know, is give you both sides of the coin, right? So, yesterday I talked about, I said, man, if we don't come into a recession first, second quarter next year, I'll be really surprised. Some of you guys said you'd be surprised if we didn't. Some of you said, nah, I don't think it's going to happen. Some of you say you think it's going to be way later. Some of you said we're in a recession now, okay? And so what I like to do is at least give you some things that are holding off this so-called downturn in the economy, right? One is the estimated inflation adjusted monthly income from money market funds. As you can see, the biggest peak, this goes back to 1990, we've ever seen and what people are actually earning on their money right now. And in August alone, this generated $26 billion in income, okay? So that's what I'm talking about. I say delaying this. Another one is, even as bad as we think about this, household debt outstanding as a share of U.S. GDP is down over the past decade, as you can see right here. So the other thing is the banks right now are putting away a lot of capital and reserves to fight all these defaults they think is going to happen with credit cards and things of that nature. So they're well capitalized, unlike in 2008 and some other times. And so that helps out in the situation. Now, understand we're going to cover a few things about bonds here, okay? And this is very important to pay close attention to. The total drawdown right now, this is how bad things have gotten. In ultra long duration U.S. Treasuries has now exceeded the stock market crash during the great financial crisis for stocks, right? Here's your bond drawdown now since, I believe this is 2020. And that's what happened during the financial crisis. So that's how bad bonds have been treated. It's just at historic levels. And look at this right here. The 30-year Treasury bond trades below 50 cents on the dollar now. And imagine this chart just as this year. Imagine people that were buying in 2022, 2021, right? And so this is why you see the banks so underwater with trillions in unrealized losses. And if you look, the bonds should continue to go down because look at all the issuance in 2023 right here, and we still got a boatload left, right? They're front running this right now, but if you look over to the left, that's the 2023, that huge bar up, and we still have the Treasury issuing billions in bonds. And so you would think it's probably going to get worse. You see it falls off a cliff after that. But again, if Japan and China, all of them keep selling or whatever, then what kind of pressure is that going to put on there? So we get to find out what's being front run and what's still left on this thing. And that's important for 2 reasons. And guys, before we continue, please hit that like button. It helps people find the video. I really appreciate that. And if you like this kind of content, think about hitting that subscribe button down at the bottom. One is, now you know why the Fed came out and did what they did, right? This is their borrowing window here. Look at all the bars. All these bars right here that have been going over, this is borrowing that the banks are doing. Each one represents about $100 billion on average, if not more. So this is trillions of dollars that are being borrowed by these banks while they put their bonds up for collateral at market value, or what they bought it for, excuse me, not what they're actually at right now. Why is this important? Because just imagine if they wouldn't have done this, what would have happened to regional banks? We already saw a couple of them go under. There would have been so many banks going under, it wouldn't even been funny, which of course would have done what? We would absolutely be in a recession right now, because small businesses do what? Who do they use? They use regional banks, and they usually have long-standing relationships with these banks, right? So if they go under, it's already hard enough for a lot of these smaller companies to get capital. What would happen to them? You would see a lot more bankruptcies right now. And so that has stayed all that stuff off, just delayed all of that. Whether it's going to happen or not, we'll see. And so for those who own small businesses, I'm happy for them that it happened and everything. Now, one of the biggest trades I think we'll remember for the rest of our lives is going to end up being when, yes, bonds finally bottom and you see yields start to tank. Whether that's going to happen now or within the next year, we'll see. One reason is, look at the net short positions right now. We've never seen anything like this when it comes to the U.S. Treasuries. I mean, who would even think about, shorting like you would a lot of these stocks you see get shorted? But look at this right here. That is the 2-year Treasury, 5-year Treasury, 10-year Treasury, ultra 10-year, and then ultra long Treasury. This right here is just the 2-year U.S. Treasury non-commercial futures positions of short positions right here, as you can see. And so it keeps going down, and so they are holding on. So obviously they're thinking these bond prices are going to continue to go down, but we all know what happens. That's why it's going to be a huge explosion up whenever this thing does bottom and start to move. Same way this stock market, right? When they start shorting these stocks, what happens when we finally get the turn up? Shorts start covering like crazy. That means they're buying it back, and it just pours fuel in the fire, right? So I think that'll be a trade or investment that most people remember for the rest of their lives, and that's why I've told members that whenever it does happen, whether it's TLT, TMF, the 2-year futures, whatever you're using on that, put down in the comments what you think about that and let me know. Now, what was this rally about today for sure? One is oil. Oil got crushed, down almost 6%. Again, hit this trend line right here on Monday. Is this right here what's going to be the path? We come down, we bounce right here, we come up, get rejected. So we're going to continue to wedge down in this right here. And it is kind of hard to believe. I know they're manipulating the oil prices, but if you're telling me the economy is slowing down around the world, what justifies higher oil prices? That's a question I have for my oil gurus down there, because they keep calling for 100, 110. It could happen, because I know they keep cutting on the supply and everything. I get that. The other thing is, like I told you, anytime you look and you see the 10-year, the dollar, and oil down, guess where the NASDAQ especially is going to go? It's going to go green, and especially if it's this red. And so especially if we're oversold too. Now when you look at the index, we didn't hit the year-to-date anchor VWAP. We didn't hit the 200 moving average. Got very close. Looks like on the daily here, I mean, we're definitely still oversold for sure. MACD feels like it's trying to curl maybe. This head and shoulders, is it still playing out? That's going to have to be the big question, right? Because you can get a green day, you can get 2 green days. But, when you look at this, if it actually plays out all the way, which I'll show you IWM, because that one's getting very close to playing out, just gauging this somewhere in that level. I mean, if it were to play out, that's where you're looking at. So let me know in the comments what you think on that. A lot of you guys spoke about which 200 moving average you think is going to be the one that gets supported. Again, there's a lot of confluence on the S&P. Now, looking at the weekly, let's be real. I mean, it kind of looks bad, right? It looks definitely bearish there, but that was a whole big move up there. And so, again, a lot of selling going on. I'd love to see a green week, that's for sure, because that is 1, 2, 3, 4, 5 red weeks in a row. I think we're due for a green one, don't you think? Now, IWM, this is like the perfect head and shoulders, almost like the best head and shoulders you ever see on an index. Playing out right here. You see where the bottom is. It's in that huge demand zone right there, which actually goes all the way back to pre-COVID. So just keep that in mind right here, 2019, 2020. And so, you know, it's funny because I was in the Discord today and I said at 10:07 IWM approaching really strong support level. And you can see right there. And then like at 10:27, it hits into the support level and immediately bounces, comes back down, retest, and then just takes off. This was the recovery of the day. This thing actually went green at the end of the day. And so this was a huge recovery. It was down over % for the day. So congratulations to small caps for finally getting some form of a bounce. We'll see if that actually is going to hold or not. And then Tesla, that's the stock of the day. This thing right here, I told you guys, once it gets over 257, and it had a huge move. I think it was like start at 247 day, into like 260-ish, somewhere in there. But once it got above 257, that's when call buyers are going to start coming in again, start pushing it even higher, and that's exactly what they did. Call buyers were just buying all day long. Market makers are having to hedge by buying the stock. Now, when will this thing actually stop or start heading back down? You know, you can call it the rising channel, rising wedge, whatever you want to call it. But, you know, when you look at this right here, are we going to come up here? We actually broke through this right in the last 15 minutes of the day, started to go into that gap. So are we just going to continue up or start selling back down and then slowly grind our way up? Because it was a big, big move today. So let me know what you think in the comments on that. Again, it said once this goes over 257, a lot of people are going to be really bullish. So if 257 holds, yeah, people are going to love this. So now Apple, one thing I'll say about this, it's the only stock I know that can get downgraded and actually go green for the day. And so you can see they're still not letting this thing go. They just won't let it go and finish that gap. It just won't do it. And so that's all I got to say about Apple. It got downgraded. I'm sure that analyst got fired. By the end of the day, they were carrying this stuff out in a box. But anyway, Meta right here. I mean, this thing right here is just wedging, right? I mean, just waiting for this explosion. And it's shocking it hadn't broke out yet. But you can see bulls and bears. Seems like the bulls are starting to slowly take control. But again, you know, 315, when this thing breaks out, is going to come, I think, pretty fast. A breakdown below, I mean, with 290, somewhere in there. But again, it just keeps wedging. It's so funny to watch these play out because it is going to be a big move. Let me know in the comments which way you think it's going. Google, that trend line we kept up there, 1, 2, 3, 4 rejections on the day so far. When we go over here, you can see, you know, it looks like the RSI is starting to pick up some momentum. I'm going to draw a little trend line in here and see if this thing continues to wedge itself in there, which really you would think one more rejection, it probably ends up dropping. But again, if momentum is shifting in this market, what are we going to see? Everything's going to start to melt up in these big mega caps. That's where they seem to like to hide their money. Now, looking out here, you can see if we can break 137, you're going to see 142 rather quickly. Again, though, if we end up breaking down this market, 131 is going to turn into 124 pretty quick. So just keep that in mind. Now, Shopify is the requested one. Two ways to look at this. One, you got that gap that still has not been filled from that earnings call where it gapped way up. Again, I told you guys weeks ago, it loves this area right here. Got good support at 249, 250-ish. That is one way to look at this. Another way to look at it is come out on the weekly. That gap turns into a fair value gap, which is an imbalance of buyers and sellers, which has not been mitigated yet. It keeps coming back down into it and bouncing. And so if it comes back down and mitigates that whole thing, you can see a really big bounce in Shopify. Now, Amazon, this one right here is pretty much done what we expected since that double top right there has been selling off. Had a nice sell off. It does not want to go below 125 right there, that key level. If so, yeah, it's coming down to at least 122, 121. So we'll see if this one gets a bounce and turnaround. AMD breaking out today. Actually, when I recorded this, it was getting rejected right there. But in the last 5 minutes of the day, it actually started to break out of this declining wedge right here. Again, it's going to have a boatload of resistance above it with the 50, the 100, all that resistance above. Now, economic data, we're going to have more jobs data come out. This one usually means more continuous jobless claims, initial jobless claims. More Fed speakers will be coming out, as you can see, all day long. But the real data is going to come on Friday, which I'll go over tomorrow. It's going to be a boatload of data concerning us and stuff. So again, let me know in the comments. You think it's just an oversold bounce? You think some shorts starting to cover? Is it just to suck people back in before you get that initial drop down? I think I know what people are going to say in the comments. So again, we'll have to see. And again, the big thing is it's just going to be volatile, guys. So just be expecting these huge swings, because if this thing starts to surge up, you're going to see a massive surge, because shorts will have to cover. There's a lot of shorts still out there and everything. But we just got to see what yields are going to do. You know, is Japan going to step in? All this crazy stuff. I did find some videos up putting the members in the Discord. I think this person's a Forex trader, and so that's what they can tell what was happening right there. And they said the same thing. They think Japan is intervening, and that was that big drop in the dollar yesterday. And so then again, when you look at the charts, you're like, well, it could have more room to run. But, you know, good luck calling the tops on these yields and dollars right now, because you're in uncharted territory in a way, right? And just stuff we haven't seen when it comes to these bonds and everything. So, you know, anyway, let me know what you do in the comments stuff. Please hit that like, subscribe button. Appreciate all you guys, man. And I'll end up seeing you tomorrow for what? Another volatile day. See you later, guys.